Hello, everyone, and welcome to yet another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top market events that have been moving markets since morning, and of course the ones that are remaining for the rest of the day. So we'll also be doing some technical analysis to try and understand what are the prevailing chart patterns on major currencies. We'll be looking at the top market equity indices. We'll also be looking at major commodities such as gold and oil. And once we do these, hopefully everyone will trade from an informed perspective. So as always, remember that this session does not constitute of any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence, trade responsibly, and practice proper risk management. So I can see there's a lot of guys that have already joined. Shout out to Paul Carrier for being the first person to join and comment. You can see like with cars in the house, Dennis Mwangi, Jay in the house. And of course, if you guys have any questions, feel free to type them in the comment section, and I'll be responding as we progress with the session. So first things first, we look at the economic calendar. We'll be trying to understand what are these events that happened this morning, causing increased volatility in the markets. So the first thing that happened as of early this morning was information coming in from Japan. We saw core machinery orders month over month increase by 3%, which was a big surprise in the market, especially when you consider that the prior reading was a drop of negative 0.6%. Analysts were estimating a drop of negative 0.4% for the month of July, but the actual data was much better than expected at 3.0% increase. So trade balance in Japan slightly worsened from negative 0.25 trillion to negative 0.3 trillion, but I believe the core machinery orders was a much stronger data point. So the People's Bank of China was also making an interest rate decision, and they chose to hold interest rates steady as expected, with the 1-year loan prime rate remaining at 3%, whereas the 5-year loan prime rate remained at 3.5%. So the big mover in the market as of this morning was the New Zealand dollar, and this was after the Reserve Bank of New Zealand decided to cut interest rates by 25 basis points as expected, from 3.25% to 3.0%. So after the announcement, there was a follow-up reading, and this was what mainly moved the market. I'm afraid I'm getting a big update here. Okay, blocking my screen, but I've cleared it. So this is from goodreturns.co.nz website. So the Reserve Bank of New Zealand cuts its interest rates to 3%, but also it sees the bottoming of interest rates at 2.5% in the March 2026 quarter. So the new forecast come as the central bank cut the OCR from 3.25% to 3.0% as widely expected. So the bank is now forecasting an OCR of 2.7% in the December quarter, which means that we are expecting even more rate cuts before the end of the year, and 2.5% in the March quarter. So even in the first quarter of next year, we'll be expecting more rate cuts from the Reserve Bank of New Zealand, and rate cuts usually done to try and stimulate the economy. So whenever you see this happening, of course, you understand that an environment of low interest rates allows people to borrow at cheaper rates, corporations to borrow at cheaper rates, and these boosts investment as well as economic growth. So in this case, we should be looking at a net positive for New Zealand equities. But then for the currency, whenever the central bank is easing policy, low interest rates tend to increase the supply of currency, and as a result, you tend to see the currency weakening. So with that in mind, we can go back to the economic calendar and cover some more stuff. So then at 9 a.m., we had more data coming in, mainly the inflation report from the UK. So the consumer price index, which is a measure of inflation in the UK economy, showed that prices of goods and services commonly consumed by the average household in the UK increased in price by 3.8% compared to the same period last year. And this was a much higher outcome compared to the expectation of 3.7% and the prior reading of 3.6%. So this was the second consecutive month that the rate of inflation in the UK was increasing, and now moving from 3.6% to 3.8%. In the prior month, I believe it was May, it was 3.4%. Then you can see the direction of inflation in the UK. So whenever you see inflation increasing like this, it's a big worry, especially for the central bank. So the Bank of England might be a little bit concerned with increasing inflation, in that it may halt the process it had been following, or the path where the Bank of England was continuously cutting interest rates. But now with inflation rising again, the bank might consider holding rates a bit higher for a longer period of time, and that should be a net positive for the UK pound, but then not very good for the stock market in the UK. So clearly it could be negative for the FTSE or the FTSE 100 index, or the asset that we usually refer to as UK 100. So as for the core CPI, it was also the same. The prior reading was 3.7%. We expected the same, but then the outcome was much higher than expected at 3.8%. So for the retail price index, the prior number was 4.4%. We expected 4.5%. Instead, we got 4.8%. So across all readings, there was a net increase in inflation. So going forward for the rest of the day, at midday, we'll be getting the final core CPI for the Eurozone, which is expected to match estimates of 2.3%. That is a core CPI. And for the overhead CPI, or for the headline CPI, we're expecting it to remain the same at 2.0%. So 2.0% inflation is within the ECB targets. So this would allow the European Central Bank to continue cutting interest rates. And in that case, it could be a net positive for European equities, and of course, negative for the euro. But then on the other hand, if we see an uptick in inflation, then we should be expecting to see an uptick in euro pairs, but a weakness in euro equities. So at 5:30 p.m., we'll be expecting crude oil inventories from the EIA in the US. So in the prior reading, there was a surprise uptick of 3 million barrels per day. Sorry, not per day, but 3 million barrels in stock. So in this case, remember this weekly data, we'll be expecting a drop of negative 0.8 million barrels. So in that case, whenever there is a drop in oil stocks, this basically means there is scarcity in oil. It tends to push prices to the upside. But then whenever there is increased supply, then this means that prices tend to go lower. So we'll be watching that report closely, especially considering that oil has been consolidating for the last couple of days. So the main event of the day will be the FOMC meeting minutes, short for Federal Open Market Committee. So this is the monetary policy committee that makes decision on monetary policy in the US. Most countries tend to refer them as MPC, Monetary Policy Committee, but for the US, they refer to their committee as the Federal Open Market Committee. So these are minutes of the last meeting. So we get a detailed report showing what the members discussed, what they agreed on. And of course, we already know that they didn't cut interest rates. But then what we don't know is what they were projecting, what they were expecting to be the reaction, and of course, what they're expecting to see in the markets in order for them to consider a rate cut. So this will be a very important set of document in that investors will get a deep understanding of what members think of the US economy. And of course, it tends to bring in volatility in the markets. So if there is a lot of Fed members tilting towards faster rate cuts, then that would likely support the US stock market. And of course, it could also support the dollar. On the other hand, if we happen to see the exact opposite, let's say the more FOMC members have been considering, let's say, holding rates, or even a dismal 25 basis point rate cut in September, then in that case, it would likely lead to further weakness in US equities, and of course further weakness in the dollar. And we know that there has been a lot of pressure from the US side, where the US President Donald Trump has been pushing the Fed Chair Jerome Powell to consider cutting interest rates all the way down to 1%. So with this tug of war between the president and his head of Federal Reserve, we'll be following these minutes closely, because we know that the president doesn't make the decision. It's the votes of the FOMC members that determine the direction of monetary policy in the US. Of course, they have a mandate and they have data that they follow. And knowing the data we have been following, especially inflation, which had a surprise uptick in the month of July, and the non-farm payrolls were also really bad, with downward revisions of over 250k jobs, then we know that signs are that there is more pressure on the Fed to consider doing rate cuts on the next meeting. So the real question is, how much rate cuts are we going to be getting? Are we going to be getting a 25 basis points rate cut, a 50 basis point, or 75 basis point rate cut? So that's the point of contention, but the market seems to be agreeing that there will be a rate cut on the next meeting. Of course, we will be expecting to see volatility in US dollar pairs, US equity indices, gold, as well as silver. And knowing that it's also the same day that we get the crude oil inventories, then there's a good chance that there will also be increased volatility in WTI, or what we call US oil. So going forward into Thursday, we'll be having the S&P Global Flash Manufacturing, as well as services PMIs for a span of economies from New Zealand to Australia to Japan, then to the Eurozone, then to the UK, and of course the US towards the end of the day. And the S&P Global Manufacturing PMIs, as well as services PMIs, tend to cause volatility in the markets. So of course we know that if there is an increase in manufacturing and services PMI, especially above 50.0 point, then this tends to be positive for the currency, and if there's a decrease, then this tends to be negative for the currency. So apologies, I forgot to mention this. Robert Mbogo, my colleague, wasn't able to join today's session. He wasn't feeling well. Hopefully, likely he will have recovered by tomorrow, and he will handle tomorrow's session. Then towards the end of the week, we get to see Jerome Powell speaking at the Jackson Hole Symposium. So the Jackson Hole Symposium is basically an annual conference of central bankers, ministers of finance, economists, as well as academics, where they meet to discuss monetary policy across different economies. And investors tend to follow this event closely, because central bankers tend to speak about their respective economies, and sometimes they drop hints on where or the direction they want to take their monetary policy. So in this case, with the key point or the key topic of key theme of the annual conference this time being focused on the labor markets, it will be a pretty interesting meeting, and of course, investors will be most interested with the speech from the Fed Chair Jerome Powell. So we will be following this closely on Friday. And remember, the meetings will be starting on Thursday and then run for 3 days. So Thursday, Friday, and Saturday. And there will be more and more speakers besides Jerome Powell. And of course, all these speakers, whenever they have some hints about monetary policy, it tends to cause increased volatility in the markets. So those are the things that we're expecting for the day as well as for the week in the markets. So I'm also trying to see if there's other highlights. So yesterday there was a very strong weakening in US equities, with main focus on the Nasdaq, which had a significant drop, especially in the New York session. Some of the key highlights were: one, Palantir Technologies, which has been one of the best performing stocks of the year, was down about 9% within that same session, whereas MicroStrategy, now renamed Strategy, it's a Bitcoin holding company, was down 7.69%, and Uplovin was down 5.22%. And as you can see, there was a lot of companies that suffered a big change in their valuations as a result of the panic selling that happened yesterday. So today, we'll be looking to see if there is an extension of that sell-off or if the market recovers. And of course, knowing what we know and what we expect from the economic calendar, we know that the FOMC report could have an impact on the stock market. So as for the gainers, we didn't have a lot of gainers yesterday. Trying to see which stocks had some positive performance. So of course, this is wrong. So I'll have to redo it again. Because MicroStrategy was among the losers, not among the gainers. I don't know what I did wrong here, but I will have to check it again and of course later. So on the Forex side, we have had quite a day, with the UK pound being one of the best performing currencies as of this morning. And as we know, inflation had an uptick, which means that interest rates are not going to be cut as aggressively as we had seen previously, and that led to a strengthening of the pound. So the yen also performed well, and of course, we have seen core machinery orders having a surprise uptick, whereas other currencies have been losing to the dollar. The euro slightly down by 0.03%. The Swiss franc is slightly down by 0.05%. The Australian dollar down 0.31%, whereas the New Zealand dollar has been the biggest loser, and that is mainly after the 25 basis point rate cut and a promise to continue cutting in the fourth quarter of this year and of course the first quarter of next year, so leading to a market-wide panic where the New Zealand dollar lost by 1.22%. So outside of that, I'm trying to see if there's any other highlight. So this is finviz.com, and if you look at the year-to-date performance of various asset classes, you'd notice that the best performing asset so far this year is platinum, which is up 39.97%. Feeder cattle is up 31.39%. Silver is up 22.97%. Gold 21.16%. So clearly, it has been a pretty good year for commodities. You can see coffee is up 16%. Bitcoin is up 14.82%. And on the stock market side, one of the key highlight stock market indices that has been doing well is the Eurostoxx 50 index, which is up 13.24% since the year started. So on the negative side, orange juice has been the worst performer, down 48.78%. And if you remember correctly, last year, orange juice was the best performing commodity. So crude oil is slightly down for WTI, down 5.37%. So clearly hasn't been the best year for oil, and we know that OPEC has been expanding production, leading to much lower oil prices. So time to see if there's any other market update. So I had a highlight here for UK inflation, and as you can see, it has been significantly moving up since September last year, when it bottomed at 1.7%. And gradually, slowly, we have been seeing inflation in the UK increasing and now hitting 3.8%. The central bank might be questioning its own resolve in continuing to cut interest rates. So they were cutting interest rates because inflation had dropped and gotten to their target of 2% and even lower to 1.7%. But now, if they continue cutting and inflation is rising, they could cause a problem in the UK economy. So looking at some other highlights as of this morning, South African inflation rate quickens in July as expected, in this case inching up to 3.5%. So in Indonesia, unexpectedly cut key rates by 25 basis points, in this case down to 5%. Swedish Riksbank holds rate at 2%. European stocks trade lower as of this morning. Reserve Bank of New Zealand delivers 25 basis point rate cut as expected, promises to continue cutting, whereas China fiscal revenues edge up 0.1%. in the period between January and July. So also, it's important to note that if you look at the major economies, the US still have one significant high interest rates with an upper limit of 4.50%, where if you compare with other economies, China is at 3%, Euro area 2.15%, Japan 0.5%, India slightly higher at 5.5%, UK 4%, France, Italy, Canada all at 2.15% and 2.75%, with Brazil having a high rate of 15%, Russia 18%, and Mexico 7.75%. So clearly, it's indicating that with high interest rates in the US, then we might continue seeing the market being uncertain, but with Trump increasing pressure on the Fed to cut interest rates, at some point, if he happens to win, then that could likely be a boost for the US stock market. So other than that, I don't think there's any other key highlights in the market. And now we can jump straight into some technical analysis and try to understand where prices might be headed next. So I'm going to share my screen, share the MetaTrader 5 trading application, hoping everyone can see it. I'm trying to get a much bigger size. So this is what we have now. So the MetaTrader 5 trading application is what you use for trading on a desktop, and if you prefer trading on a smartphone, we have Equity Trader, equity with an I at the end. If you search your Play Store, Equity Trader by FXPesa, you'll find our app, and you'll be able to access all these asset classes. So in this one app, you're able to basically do deposits, withdrawals, advanced charting, advanced risk management tools. So I suggest you check it out. So I'll be starting the dollar index. Clearly, you can see that today being the third day of the week, we've had 2 consecutive days where the dollar index was gaining. Early in the morning, the dollar had started strong before erasing some of those gains, but still likely in a positive momentum note. And looking at various pairs in the market, I'll be starting with the New Zealand USD. And as you can see, the New Zealand USD has had a significant drop since market open, mainly because of the rate cut we just talked about. So on the 4-hour chart, you can see it's a pretty big dive. On the daily, it's a pretty big dive. So I don't know whether this is overextended. So perhaps you could be seeing a pullback later in the day, but clearly we broke every available recent support area, and the market just kept going down. So if you go to the 1-hour time frame, you'll notice that there has been more and more panic selling. So even if we happen to see some form of pullback, I still expect to see more downside momentum. So yes, right now we are seeing some form of support, and I expect that if the market happens to retest this area here, it seems to be some area of interest where the market retested earlier, then the continuation could be in order. So AUD/USD has also been on a very strong selling momentum after trading in this triangle for quite a good number of days, or rather around 2 to 3 weeks. So after the sharp drop, we had a pullback here, and now the market is continuing in that direction, which implies that we could be seeing an extension of this move all the way down to the prior support around 0.64186. So as for USD JPY, we've had this triangular momentum. So since the sharp drop here, it's more of a sideways momentum for USD JPY. But then following the price action of yesterday and today, you can see we had a pretty sharp dip and the market bounced right back again, which implies that we could be seeing an extension of this channel. So an extension of this channel means that the market attempted to break towards the lower side, go towards the upper side, and now we could be seeing the market retesting the lower side or the support area of this kind of flag formation. So on the pound USD pair, we've had this flag kind of formation since the week started. So of course, this morning we attempted to break towards the lower side, failed, and now the current momentum downwards as long as it doesn't break outside of the channel. So on the other hand, for Euro USD, we've had this sideways momentum too. So there has been a lot of consolidations, and breakouts could play out after the FOMC meeting minutes later today. Of course, this is a clean break. Since yesterday evening, there has been a pretty sharp drop. And of course, normally whenever you get this kind of formations, the market will retest the breakout area and then continue in the direction of the break. So in this case, much weaker Euro USD is expected. And whenever you have such a pattern, you expect the market to retest the base of the pattern. So in this case, an extension to 1.15910 for Euro USD. So for dollar trading against the Swiss franc, still we are seeing the same kind of market pattern, which is more of consolidations. A period of time where the market is just moving sideways. So in this case, we just retested the upper band, and we could be seeing the market riding all the way back to the prior support. So we don't have to go all the way back. Of course, you have to observe that there has been significant support over the last, I would say, 3 days. So the market would likely bounce off this area here. And that's around 0.80482. Japan stock market index was also extremely bearish yesterday and of course today. So clearly after a sharp rise getting into multi-year highs, the last time we saw the Nikkei 225 index trading at such a high valuation, I believe it was more than 20-30 years ago. And now after hitting that high, you can see that the key level resistance was around this area here. The line I've highlighted. So after the breakout, there was a retest. And now after the strong rally last week, now it seems like the market is going back for the same area. So the same area implies that we could be seeing a retest of 42,516. So despite this pullback here, it seems more likely that we trade in the direction of the momentum lower. So for the FTSE, that is the UK 100 index. With the inflation being on the rise again, it seems like the market could be going right back into this consolidation that lasted about 4 weeks. So for a period of about 4 weeks, we can easily agree that the market wasn't going anywhere. It was just trading sideways. So last week attempted to break towards the upper side before dropping. And now today after retesting the upper trend line here, you notice that there's more bearishness. And if you even go to an even smaller time frame, then you notice that from yesterday's high, there is some form of decline here, and the market could be headed much lower. So there's more pressure to the downside. So clearly, we could be seeing the market going to retest yesterday's low, and this is a likely outcome for the day. So on the other hand, looking at gold, also in some form of consolidation, slightly bearish, trading within a wedge. Of course, we saw the market bouncing from the lower trend line. And in this case, the expectation is that now gold goes to retest the upper trend line. So this has been the case since morning. So right now we are seeing some pullback, but nevertheless, I still expect gold to eventually make the push towards the upper trend line, with targets somewhere around 33, 37 price action area. So for the UK oil, Brent oil, similar with the US oil, we have been in this kind of consolidation for a while, meaning that prices have not been moving down or up. So it's more a sideways momentum. And now you can see the strong rally over the last couple of hours ahead of the EIA report on oil storage. So in this case, for the oil stocks, a good chance that we break this particular trend line. And if that happens to be the case, then we should be expecting the market to rally to the top of the pattern. And in this case, a strong break would push us to $67.356 per barrel. But then there's also the chance of the pattern holding again. And if the pattern holds, it means that the market bounces from this area as it did 2 days ago and goes all the way back to the lower trend line. However, given the momentum we are seeing, we could be seeing a potential breakout here. So the Nasdaq 100 index was in a consolidation. So you can see how long the consolidation lasted. That was about 4.5 days, with yesterday being the key level breakout point. And from the H1 chart, you can see there was an immediate sell-off that led to some form of panic selling. So today, there was an extension of the same panic selling. Right now, we are seeing a pullback, but then not yet bullish enough to assume that we have changed direction. So yes, you can see there are various levels in the market where these may have played out as a key level support. Notice from resistance to support here, and now the market bouncing at exactly that point. But now, still, this is a quite significant drop. So in this case, we wouldn't just assume that the market has turned from there. So remember, this was a drop of 2.93% within the span of about a week. So now that we are seeing some form of bounce, good chance that we could be seeing the market retesting the support area here. And if we trade in the direction of the momentum, there's more likelihood that the Nasdaq continues losing. So the US 30 or the Dow Jones had increased volatility yesterday with a sharp drop. Remember, it was trading within a wedge. There was a sharp drop with some form of liquidity grab here, made a very strong rally and then reversed immediately, implying that the bears were in control towards the end of the session. And then today moved even further back downwards. And now, if I eliminate all the items I had added on my chart, you can see a key theme here. So we are basically seeing a market that has been forming lower lows each and every day. Yesterday attempted to form a new high and reverse the trend, but that did not hold for long, which implies that we could be seeing more bearish momentum for the US 30. If you go to SP 500, it's the same thing. So SP 500 here, the target was pretty easy to make with a sharp drop towards this area here. And if you notice, this was a key level resistance, now turned to support. The market broke right through that particular area. And after breaking, notice how there was a retest, and now good chances that we see a continuation with a further bearish momentum move. So there was a key level support area here around 6,167. So good chance that we see the market retesting here and moving further back downwards. So it's a kind of wait and see. Bitcoin made a new all-time high last week of around $124,500 per Bitcoin. So with $124,500 per Bitcoin, there was an immediate sell and it kept going down. So it seems to be finding some kind of support along these price action areas, but the bounce doesn't seem strong enough to convince someone that it's moving back up. So bounces, whenever there's a reversal, they tend to be stronger, but right now it's not strong enough. So still, this is that we haven't hit the key level support yet. So good chance that we see the market retesting 111.9. So with New Zealand USD expected to be moving further back downwards, if we now switch to European equities, you'd notice that they have also been experiencing the same kind of consolidation, starting with the German stock market index, which was strongly bullish. But then since the high we saw last week, all we have been seeing is these kinds of consolidations here. So here, if you compare the highs since the high that we saw here and the low of the last couple of days and the low of today, then it seems like some form of consolidation. And in this case, it's safe to assume that we are trading within the pattern, and the idea is that the market retests the upper trend line here. So Swiss stock market index finally made a very strong rally after a sharp drop with some form of liquidity grab here. And now we have broken the high of the last couple of weeks. And when I say last couple of weeks, this is quite a good number. I would say 8 weeks. And now we are on a path that may likely end up in a new high. So good chance that we see the market extending to 12,328. Norway stock market index from H1, we have been trading in this range for a while. Remember last week we talked about a retest of this area and moving up. But now it seems like the market is persistent on trading above this, And remember, we still have this gap here that was not filled. So good chance that we see a very quick rally to 1,562 price action area. The French stock market index also seemingly very bullish today after forming what looks like a cup and a handle. If you think of this as a cup, then this would be a handle. And of course, in such scenarios, you expect the price to extend the momentum higher. So in this case, we are looking at a market that is looking to make 100% recovery from the sell-off that we saw on April 2. And now that we have really struggled to break above this area, there's a good chance that we break and move higher. So still showing a very strong sign of bullishness, given the size and shape of the most recent 1-hour candles. So for the Euro Stocks 50 stock market index, if you look at the daily, we've just broken above the prior two candlesticks that had formed the resistance. So in this case, I'll try and zoom so it's clear. This is on a daily chart. And as you can see, this was the resistance here, same resistance here, and now we are breaking above that area. So this implies a likely run to a new all-time high, and the new all-time high would be above 55.65. So still a good chance that we see the market extending this momentum here and moving higher than that. So for the Netherlands stock market index, from the forward chart, you can see that we had a break towards the lower side. So even if we were to extend our trend line here, which was holding for several weeks, you can see this temporary period where there was an attempt to move lower. We extend our trend line on the upper side too. Then we have a projection for the current rally in the stock market index. So in this case, an expected resumption back into this channel. So of course, we target the upper side of the channel. And lastly, as we look at the Asian side, clearly the Asian stocks have been pretty bullish, with the Hang Seng index making some very strong rally at the beginning of the month. Of course, we've had this pullback here, and the markets seems to be finding some key level support here. Judging by the candlesticks that we saw here, which was a very strong rejection of lower prices, a good chance that we will be finding support around this area here. So now, looking at the current price action and the performance for the week, what we are basically seeing is a market that is finding support along this path, and of course some form of resistance along this path here. And now I hope it becomes clear that there's a likelihood retest of key level support here. So for China A50 index, clearly breaking into new highs. So if I zoom here from the daily time frame, notice how we had this channel here. Eventually the market broke and retested, and now we are seeing an acceleration higher. So we had this resistance here, which the market really attempted to break, failed last week, but now we are seeing signs of the market basically cruising through that resistance and breaking above it. So notice how there was 3 consecutive days of, I wouldn't say consecutive, on this day we didn't retest. So 1, 2, 3 consecutive highs where the market failed to beat that resistance, but now we are seeing the market cruising through, which implies a likely chance that the market keeps moving upward. So that's it for the day. I'll be answering the questions in the comment section as we approach the end. So, good question here. Why is FX misbehaving of late? So yesterday we had a technical challenge on our charts, especially on Euro USD. The team really did some good work in trying to restore normal working activity on our charts. So if you are affected directly, I advise that you write an email to support@fxpesa.com. If you have screenshots, even better, and we'll be able to sort you immediately. So on the question of withdrawal, I believe you do the same process. Kindly send an email to support@fxpesa.com, and we have a team ready to handle any queries that you have. So it was an issue of yesterday, but it was resolved. now we are back to normal working conditions. So, of course, I'll make a follow-up with the team to know why there is you're having challenges with your withdrawals. But of course, as I always advise, try and send an email with the details of your query to support@fxpesa.com. So it's an email that has a multiple team dealing with it. So all the queries that come in through the email, we try to handle them with high priority. So sometimes you cannot just maintain a forex trading platform with a 24/7 support, and you get it throughout all the 65 days of the year without having system upgrades or technical issues. So every now and then, every broker goes through the same thing. So the fact is that we are licensed and regulated, and we always take care of our clients. So in case you have been affected in any way, and as I advise, write an email and we will respond and support you with your query. So good question here is thoughts on JPY pairs. So JPY pairs, as I mentioned, from what you can see with USD JPY, we are still in a flag. This is still the limit. We haven't had any big momentum above this since yesterday. So clearly, we haven't seen anything below this. So unless there's a breakout, we continue trading within the pattern. So it's more of consolidation being observed in JPY pairs. So with USD strengthening slowly and Washington cooling off wars, what's your take on gold, stocks, and oil as we head to the year end? Well, Jerome Powell has a habit of nuking stocks, so we don't know what he's gonna say on the Jackson Hole Symposium, but more likely that he might nuke stocks yet again. So there's still that concern that if he remains adamant on holding rates higher for longer, that could likely lead to a weakening of stocks. So it's a wait and see kind of a scenario. I'm not 100% sure of how the market will react. On the other hand, with the strengthening of the dollar, it's mainly backed by Jerome Powell, knowing that Jerome Powell might hold his ground and continue holding rates higher for longer. But then if he cracks up and goes for bigger rate cuts, then we could be seeing the exact opposite. So as for oil, mainly from Trump, he won't lower oil prices. He doesn't want to deal with the problem of inflation. OPEC Plus are expanding production, so long-term oil prices are expected to be moving much lower. So also a good question from Dennis Mwangi. What is the relationship between the US 10-year bond yields and US currency price movement in the forex market? So bond yields tend to have an inverse relationship with the USD. So in this case, for the 10-year, which is taken as the benchmark, if bond yields are rising, the currency is dropping. If bond yields are dropping, the currency is rising. So it's a very easy relationship. So the way you think about it is this way. When markets are in heavy demand for bonds, like buying the actual bonds, the yields tend to drop. If markets are in panic mode and they are selling bonds, then the yields tend to rise. So this has the overall impact of causing an inverse relationship between bond yields and the currency of a country. So whenever you see, let's say, bond yields are rising sharply, like they have been, especially if you look at the mortgage rates in the US, they are at multi-year highs. Then you tend to see the dollar index trading below 100 into 97 levels. In that case, mainly because bonds have been on sale. So if you look at Japan and China, which have been major buyers of US treasuries, they haven't been buying. Instead, they have been offloading, leading to much higher bond yields, and as a result, the dollar has been weakening. So if we happen to see the opposite, bond yields dropping, then that would likely indicate that the dollar is regaining strength. So as I said, there was a technical issue yesterday. That issue was fixed, and you cannot be able to deal with everyone all at once. So as I mentioned, if your account was impacted yesterday, it's a very simple request. Kindly email support@fxpesa.com, and we are continuously handling all these cases of everyone who was affected. So thank you, everyone. Thank you for your time, and I hope to see you on the next session. So remember to check out the latest episode of the Bullish Banter podcast. I don't know why I said episode. For those who are looking to begin their trading journey, check out the Novice to Pro course. It's available on FXPesa YouTube. I did this personally about 2 years ago. So to take you right from introduction to trading, charting skills, tradable assets, knowing your candlesticks, market structures, trading strategies, risk management, understanding market news, building a trading system, and trading like a pro in 10 perfect episodes. So once you cover these, you'll be able to understand more content that I present on the market snapshot, and of course more content on the bullish banter. So for the bullish banter, we are inviting our listeners to come and have a conversation with us. So if you would like to be hosted on Bullish Banter, you understand the game, you understand trading, you have the necessary experience, then we are opening our hearts to you guys. Come join us. Let's talk about the markets. So in the latest episode, we featured a Ugandan trader, Funded King, how he trades with prop firms, risk, as well as his trading psychology. So that's it for the day. Thank you very much, everyone, and I hope to see you on the next session.